Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Welcome back to the channel, traders. Today, we're diving deep into a fascinating microcap stock that has flashed brightly on our hard-to-borrow screener ONFO Holdings, Inc., trading under the ticker ONFO. Show ONFO logo/stock chart if you've been looking for a real-world example of what it means for a stock to be extremely hard to borrow, and the potential implications. You've come to the right place. ONFO presents a unique case study right now, and we're going to break down exactly why. So, what exactly is ONFO? ONFO Holdings, Inc. operates in the communication services sector, specifically within internet content and information. This company has a business model focused on acquiring and developing internet businesses, segmenting its operations into business-to-business, B2B, and business-to-consumers, B2C. They manage websites, offer digital services, advertising, and content placement. It's a microcap stock, meaning it has a relatively small market capitalization, which often makes it more susceptible to significant price movements. Show company overview graphics. What is cost to borrow and why it matters? At the heart of our discussion today is the concept of cost to borrow, or CTB. When you short a stock, you're betting its price will fall. To do this, you borrow shares, sell them, and hope to buy them back later at a lower price to return to the lender, profiting from the difference. But borrowing shares isn't free. Brokers charge a fee for this service, expressed as an annualized percentage. The higher this fee, the more expensive it is to hold a short position. When a stock's CTB skyrockets, it's a huge red flag for short sellers, indicating dwindling supply and high demand to short. Why this stock is hard to borrow right now. Now, let's talk about ONFO. This stock is currently exhibiting an extraordinarily high cost to borrow fee of 1955.0% annualized. Highlight CTB number. Yes, you heard that right, nearly 2000%. This is one of the highest CTB rates we see, making ONFO an extremely expensive stock to short. While we don't have CTB momentum data or the exact shares currently available to borrow, the sheer magnitude of this fee strongly suggests that ONFO shares are incredibly scarce for shorting. With an estimated float of just 4.5 million shares, any significant short interest can quickly make borrowable shares disappear. Our internal composite squeeze score for ONFO stands at 55.6, indicating a moderate, but certainly present, squeeze potential given these conditions. Squeeze mechanics explained. So, how does this incredibly high CTB relate to a short squeeze? It's simple. When shares become this expensive and hard to borrow, short sellers face immense pressure. If the stock price starts to rise, their losses mount quickly, and the daily cost of holding their short position becomes unsustainable. This can force short sellers to cover their positions, meaning they have to buy back shares in the open market to return them to their lenders. This buying pressure, driven by forced covering, can ignite a rapid upward surge in price, a classic short squeeze. It's a feedback loop. Price goes up, shorts cover, price goes up further. Remember, though, high CTB doesn't guarantee a squeeze. It can also mean short sellers have strong conviction and are willing to pay the price. Dilution risk check. One critical factor to consider for any potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total share count and often decreasing the value of existing shares. For ONFO, we've found good news on this front. No recent dilutive SEC filings such as -1s, -2s, or 424Bs have been found in the last 90 days. No dilution graphic. This is significant because new share issuances can provide an ample supply of shares for short sellers to cover with, effectively negating or significantly weakening a short squeeze thesis, even with high cost to borrow. The absence of recent dilution helps maintain the scarcity of ONFO's float. Recent reverse split watch. Now, for another important recent development, ONFO executed a 1/4-50 reverse stock split just yesterday, on August 10, 2026. Display reverse split info. A reverse split reduces the number of outstanding shares and, in theory, increases the share price proportionally. For ONFO, this means their 4.5 million share estimated float has been reset. Historically, many microcap stocks tend to see renewed volatility or price pop within about a month after a reverse split. While this is a common pattern observed in some names, especially those with high short interest, it is not a guarantee and can be highly speculative. This reset of the share price and reduction in actual share count can sometimes spark new interest or create liquidity changes that lead to significant moves. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's look at ONFO's recent price action. This stock has been on an absolute tear. While today saw a modest plus 2.50% gain, look at the bigger picture. Over the last 5 days, ONFO is up an astonishing plus 3,269.86%. And zooming out to the last 30 days, we're talking about a plus 748.28% increase. Show price chart with highlighted gains adds incredible momentum. However, today's volume of 2,202,000 shares is significantly below its 30-day average volume of 45,763,960 shares, meaning its relative volume is very low compared to its recent activity. A low volume day after such massive gains could signal consolidation or a pause. For ONFO, keep a close eye on borrow rates, available shares to short, and any sudden increases in volume, especially on upward price moves. ONFolio Holdings Inc. ONFO is a fascinating stock for those interested in the mechanics of hard-to-borrow situations and potential short squeezes. Its astronomical cost to borrow, tiny float, the absence of recent dilution, and the recent reverse split all contribute to a unique setup. The historical pattern of post-reverse split volatility in microcaps adds another layer to watch. This is a highly speculative area of the market, but ONFO gives us a real-time, concrete example of the dynamics involved. Always approach these situations with extreme caution and a robust risk management plan. If you found this breakdown of ONFO insightful, please hit that like button, subscribe for more unique stock insights, and let us know in the comments below what other stocks you'd like us to analyze next. Until then, stay safe and trade smart.